Russell for mining.com.au, and joining me today is Data Dan Petrie. Now, Data Dan, I am going to get straight into today. The events of the market this week have been pretty exciting. I've heard it called Mad Monday, the Flash Crash, and Turnaround Tuesday. But what I guess I'm most interested in is the impact this had on sentiment at one of Australia's largest mining conferences, Diggers and Dealers, which just wrapped up this week. Tell me, how do you think the market events of this week influenced the mood at Diggers and Dealers?
Really, really interesting time here, in the last few days. And of course, now for those, investors and miners in Perth, any type of worrying sentiment in Wall Street is going to create jitters. And of course, we did see some mixed reporting and sentiment coming out of that very conference. But the key point is really that this is also a timing issue. August, September is typically a terrible time for any type of stock market performance. And so if you were to look, for example, the performance of September, it really is one where the market is interestingly often in the negative, and it's that's not a coincidence. That's actually happened quite a lot, and so also because of the absence of news. But what happened? Well, fears of a US recession, really, really came to bear last Friday after a weaker than expected jobs report. Now, that's a backward-looking number, and if anything, this will put more pressure on the Federal Reserve, although I think they're in the position where they can simply bat away anybody saying we need a rate cut because of the electoral cycle there. The fact of the matter is that there will be a rate cut in September. The quantum now is what we're discussing. It's going to be 25 basis point, or will the Fed react to sentiment saying you've over-egged the interest rate rises, we need to see some relief, and will that flow through to Q4? That remains to be seen. But by and large, biggest drop in 5 years, the relief rally came, and now we're starting to see some smaller movements. So that's kind of par for the course with when you have so much interconnected markets. They tend to recover quite quickly, but they tend to overreact quite drastically as well.
Moving on from diggers to EVs. Now, listen, I haven't quite embraced the electric vehicle revolution yet. However, I know there's a lot of
No.
people that have been quite keen to be early adopters. Tell me, is this trend slowing down? Have we bought all EVs we can handle for now, or is there likely to be more people coming along and uptaking EVs, and eventually I'll join in the trend?
Growing, but slowing. And there's life in the old automobile yet. Now, one thing with EVs, of course, is they're the rage for those who are upwardly mobile, so to speak. But for a traditional car with combustible fuel engine, so to speak, if I've got that terminology correct, they're still a lot cheaper to produce. They don't require the same amount of mineral intensity per unit, so to speak. So a Tesla, for example, is going to be a lot heavier than a traditional fuel car. And so that intensity of effort to create these machines is obviously going to be positive for mineral producers, but by and large for the consumer, it's still unaffordable. So growing but slowing in terms of whether people are buying into this narrative that they're changing the planet, possibly. But the fact of the matter is, it's like any market where they start to get maturity and they come up against price falls. The challenge now for electric vehicle makers is to ensure how do you make your product compelling. They don't typically do too well in the second-hand market, really just the nature of the fact that electric vehicles, and there's always questions about battery life and those things. So again, it's a work in progress, but growing but slowing, but still taking a fairly decent chunk now of the broader automobile market. Also, though, the tailwind of this is that the demand for these battery metals and the likes of the manganese and all these complementary ones is still quite elevated. So by and large, growing but slowing.
And finally, sort of a passion topic of mine that makes me absolutely no fun at dinner parties is the green infrastructure push. Now, there has been a lot of legislation enacted in the US and not recently, over 12 months ago in Europe, about insisting on domestic supply chains or reshoring those supply chains, essentially to build local infrastructure within these countries. Tell me, how is this trend playing out?
Well, basically, what happens when governments start to sign up to the likes of these net zero targets, a lot of that budgetary and infrastructure expenditure takes on that. How do you make it greener? How do you ensure that you've got the best bang for your proverbial buck? How does it ensure that the materials and those things you're using, the services, are going to create a better environmental outcome? And so that's all obviously also being funded really by expanded balance sheets. I think one thing which we tend to lose in this is that the debt currently being now put onto global markets through bonds and government bonds especially is significant. But that trend's not going away soon. And so that transition, while ultimately it's all very exciting, the simple fact is it has to be funded, and it's currently being funded by debt. And so with these green projects, so to speak, some of them are very, very, very good. But there is, of course, obviously a great demand for raw materials. But how effective will it be? And for example, is the cost going to be basically overrun government balance sheets? Probably not. But in the short term, though, it's a question worth asking: how much will this actually cost? Because whilst it's very, very good to renew infrastructure, and in the long run, a pragmatist would say that is the right way to go, the cost factor does certainly play a role in this. And again, commodities and the area of the world we live in, those prices are elevated. So, last week we spoke about Olympics infrastructure. Now, the latest estimate, according to some economists around the Brisbane Games, for example, it's going to be 40% more expensive based on that, procurement angle. But again, this is a very interesting time to see. There's only so much to go around. How much can go around? But the infrastructure play is certainly going to be a positive tailwind in terms of economic growth for some countries for some time.
Listen, Dan, thank you so much for those insights. I am very interested to watch how the green infrastructure momentum plays out in markets. Thank you so much for being here, and I look forward to seeing you again next week.
Thanks, Shae. Pleasure. See you next week.